Thank you for joining me. I'm Alex, and I would like to talk to you about Thomas Cook. And to preface this a little bit, I don't recommend anyone buy the stock right now, but I think it's important to look into stocks like this because they just went bankrupt today. And I think it's important to look into bankrupt stocks because sometimes you find that their value currently is higher than what they're trading at despite the bankruptcy, and sometimes you can find some real gems in there where it just unequivocally makes sense to buy the stock regardless of their bankruptcy and even without any hope of them restructuring. I don't think that's the case here, but I'm going to get into it anyway. So what they do is they do vacations, especially cruises, but also all-inclusive vacations with flights and hotel and entertainment and everything. And obviously, since the Great Recession of 2008, or whatever you want to call that recession, people have been taking far fewer vacations than they used to, and the economy has never really fully recovered, especially in certain countries in Europe where things kind of just are still lingering around where the economy was. So obviously for the entertainment, leisure, whatever market, that's not a good thing, and you kind of have to make some deep cuts into things that you can without losing revenue or profit. And that is a really hard thing for a lot of companies to do because it's always really hard to cut staff that you don't need without cutting staff that you do need. So obviously the whole we'll just fire 50% of the people and hope it works out thing doesn't really ever work out. So their price currently is 3 cents, or rather they're listed on the British Stock Exchange. So they're trading currently at 3.4 pence, and they're losing 90 pence per share, which means they're losing 30 times, or slightly less than that, their current loss. Or their current loss is 30 times their current price, which is kind of weird. So dividend and payout ratio obviously zero because they're going bankrupt, so it would be insane for them to pay a dividend. Their revenue, 9.6 billion pounds, actually went up 500 million from the previous year, which I would think is a good sign, but I would also think is expected. Their earnings, negative 163 million, down from positive 10 million, so obviously they lost quite significantly there, and that's obviously not something that can be adequately explained by either the economy or their cost going up. Obviously things were wrong there and things were mismanaged there, and things just went downhill fast. So total assets of 6.6 billion, total liabilities of 6.3 billion, and net tangible assets of negative 2.8 billion. And that is because in their total assets they included 2.5 billion of goodwill. I think that that's overstating things a bit, and I'm very skeptical of the whole goodwill thing that many companies claim that they have and they can somehow put a price on. So I think that the goodwill should not just be listed under their total assets of any company, really, because brands used to have a lot more value than they do, and brand recognition and things like that being on a balance sheet kind of does not make sense to me at all. This day and age, people will buy the better quality product regardless of whose name is on it. So with that said, obviously net tangible assets of negative 2.8 billion pounds, not a good thing, and not one of those gems that I was previously talking about. So clearly, I don't think anyone will make money buying the stock today. I also don't think that anyone will make money shorting the stock. I think that would be a stupid thing when it's already trading pretty much near zero. So, with that said, don't buy the stock. It's not worth it. Their assets are definitely not worth the price, and their liabilities are still quite high. So, I think that they might find someone to bail them out and give them money to operate, and I think they might be able to turn things around. And with that in mind, and if you're kind of familiar with the industry and with what's going on inside the company, and you can adequately research that and kind of have a decent look at whether or not a bailout is possible, whether or not it's likely, and where the company would go from here if that happened, I think that this stock could have a huge upside. But I don't have that knowledge. I don't know what's going to happen with the global economy in the coming years, and I don't think that there will be a miraculous recovery of the global economy in the next 5 years that would definitely lift the stock out of, the basement of the stock market. So I'm not going to buy it. I don't think anyone else should buy it unless you're very knowledgeable of the sector, the company, the restructuring that could happen here. And that's it for me for today. If you haven't already and you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.